The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 30th. Wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their Wednesday. Let's make sure that you and I do all that we can do to have a wonderful Wednesday. I know I'll do all that I can do during the next hour. And for all you new listeners, welcome to TFNN. Welcome to the Hotel California. We get things kicked off here at 8 a.m. each and every trading session. We go live from 8 to 6 p.m., 10 hours of live trading where you can get access to all kinds of great technical information. You can give us a call at 877-927-6648. We'd love to hear from you. You know, you and I, each day we start off with the same number of minutes in our time bank out there. Each of us, each day, start off with 86,400 beautiful seconds. And I am grateful that you've decided to spend the next 3,600 seconds with me. I'll do everything that I can during the next hour. We'll take a look at different tactical tools, such as the A to B equals CD pattern. We'll take a look at those to help us identify where price may be headed to. We'll look at Fibonacci expansions and retracements. We'll try to find Gartley buy and sell patterns, butterfly buy and sell patterns. And, of course, we're going to look at the signals that the Bulls and the Bears leave for you and I so that we can understand what they're doing in their game of tug and war. We'll look for reversal signals. Again, our call number is 877-927-6648. Give me a call, folks. If you never test drove my newsletter service, just go over to the homepage of TFNN.com. You can click on the Trader's Edge show, or you can click on the Money Masters show. And that'll take you to a link, a page with my name on it, and a number of different tools, webinars, workshops, things like that, a little bit of background information. If you click on Mastering Probability, you can test drive that newsletter service for the next 30 days. No unconditional money-back guarantee on that. So do yourself a favor. Click on over to the homepage of TFNN.com and do that. It is Wonderful Wednesday. We've had a pop. We've had a drop. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow off 21 points. It's trading out at 16,891. S&P is unchanged, up 80 cents. The NASDAQ Composite up 17 points, trading out at 44.59. The Russell 2000 up $3.60. It's trading out at 11.45. New York Stock Exchange off 4. NDX 100 up 16. You've got the Philadelphia Semiconductor Index up 4 points right now. Gold is back $5. Silver is totally flat. Light sweet crude is up 31 cents out here. So it looks like we've got Mr. Toad's wild ride out here. One of those great Disney rides. Let's go take a look at the markets. Let's go see if we can figure out what they're doing. That means we've got to come back and take a look at the intraday charts out here. Even though that's where we ended the last hour, it's going to be the easiest way for us. So we're going to do two things. We'll go take a look at some market profiles as well. If we take a look at let's start off by taking a look at the Dow here. So the Dow has been traveling in this nice little rising price channel. That price has contained itself. We saw a little breach of it. That little breach of it yesterday coming into the close. Price got back up into it. There was a little bit of a celebration after the GDP numbers were released out there, but really, in retrospect, the reason why we take a look at retracements of swing points, all it was doing was making a 0.618 retracement of its last high, which was the session from 12 noon yesterday. That high was at 16,993 down to the low that was put in yesterday, which was down at a price point of 16,840. Now, that's been taken out. Prices right now traveling at 16,831. I have to say that until price breaks the low out here from 12 noon, that's between 10 and 12 because we're looking at a 2-hour chart on my screen out here, and until it breaks that 16,808 level, won't really release a ton of information to us. It has broken through the descending, rising price channel, but we've seen this take place here, a few cracks, as I say, yesterday. So now I've got to switch over and take a look at, horizontal levels of support. By the way, when you take a look at descending or rising rising price channels or trend lines, what you want to give priority to is the horizontal lines out, the horizontal consolidations. And in essence, that's maybe what we have going on inside of the Dow as we speak. Now, our man, David White, who does the show from 2 to 3, he's the lead, he's the warm-up band for the Tom O'Brien show from 3 to 5. He posted in the Den. In fact, the Tiger's Den, folks, is something that you'd also want to try, because you got a great group of trader investors in there providing you with all kinds of information. It's a wonderful peer group. You can test drive that service for 30 days as well. And Mr. White says that at 2 p.m. today, the FOMC is going to publish only a statement. There's going to be no update to the committee's economic forecast. There's going to be no press conference, no Q&A. I guess Janet Yellen has got better things to do than to sit there and maybe say something that she doesn't intend to say out there. So no fireworks as a result of anything that she might say out there. And so that's the deal. So maybe 2 o'clock. I think it's probably just going to. Let's see, what else does he have here? It says economists estimate the Fed will keep interest rates unchanged. I would agree with that, and taper monthly, pulling back by another $10 billion. So all of that is really baked into the market as we speak. It doesn't look like we're going to get any new information out here. So we've got a couple of different trends out here. If we take a look at horizontal, and we take a look at a possible consolidation pattern, well, inside the Dow, this is really kind of it as we speak right now. So that consolidating pattern, and that's helpful because we can take a look at this short-term consolidation, meaning only, because it's a 2-hour chart, only takes us back to July 10th. Not too bad. We're at the end of the month, obviously. We're coming to the end of the month out here. So the bottom of the consolidation, you can use 16,808. Let's use 16,800. Make it easy on the old guy here. 16.8 versus the high of 17,063. What is called 17,050. So you've got about a 250-point consolidation. You know what that says? It says, hey, if you break the consolidation, your measured move is about 250 points to the upside or to the downside out here. So that's the message of the Dow in taking a look at a 2-hour chart out there. If we take a look at the S&P 500, we'll take a look at the ES Mini. I was showing here in that first hour this descending price channel. It didn't spend a ton of time identifying the bottom of that price channel, but it seems to be relatively good. We've got what looks like 3 or 4 co-located opens and closes down there. So that should be a level of support. If that breaks, what you'll see, because you see 2 other patterns out here, if that level breaks, you can see a 0.618-ish. It really says 0.707, so let's tell it like it is. And a 0.841 area says that you would see the ES Mini travel down somewhere between the 1950-1955 level if it breaks through the bottom of that descending price channel. Of course, breaking a price channel that's already moving lower is not really a breakdown, right? It's already moving lower, although gradually out here. But that would be a level of support if it breaks through that price channel out there. So that's what I see going on inside the 220-minute charts there, both for the ES and the NQA. We might as well go, the Dow, the YM, and the S&P, the ES out there. And so that begs the question of, hey, why don't we go take a look at what's going on inside the NQ? So, you're absolutely right out there. Let's go take a look and see if we can find any pattern inside of here. And if we see anything, you don't see much of anything really at all, right? Let's take a look at what it's doing. The high came in on July 24th. That price level is at $39.91. You're at $39.67. So we can see no damage has been done here inside of the NASDAQ. The question is, can this just simply continue to prop the market up? It has its own version of a rising price channel, nowhere near the thread of the bottom of that level out here. If we take a look at retracements, let's do that from its swing point low. Takes you back into the 8 p.m. time frame on July 17th, up to the high that came in at 8 o'clock in the morning on July 24th. What you'll see is the retracement that has been done thus far inside of the NQ. It's only a dead cat bounce. It's only a 0.382 retracement, 39.38. So absolutely no damage done here, none whatsoever. Now, if we see the NQ go ahead and get above 39.91, you're at 39.68 right now, so another 30 points higher. out here. What is likely to unfold is an A to B equals CD to the upside. And it's a doozy, by the way. And you say, what's that doozy equal to price-wise, projection-wise? Well, your A point's going to be down at that low of about, 38.54. Your B point's going to be up here at the 39.91. Your C point is going to be down at that 12 noon session from July 28th out at 39.29 out there. And let me pull this back and scrunch. That's a technical tool that us chart pattern recognition folks have to use. We've got to scrunch our charts every now and then. And that would say if you see a breakout above that swing high at the 39.91 level, well, 4,066 to 4,100, which is where Stevie San believes that the NQ is actually headed to. 4,100 becomes the price target. Now, it won't head up there until it breaks that 39.91 level. No guarantee that that's what it's going to do. And at this stage, you're just kind of mid-stroke. You're almost better off just, staying on the sidelines out here and waiting to see if it breaks up or down. But so far, there's been no break to the downside, and that is inside of the NQ. Now, those were the 120-minute time frame charts that we looked at. Let's go into our e-signal software. Let's go take a look at the multiple time frames for these instruments as well. Let's see if we can get any trading information. Now, let's stay with the 120-minute chart out here, and let me go back. Let's specifically go take a look at the NQ. Let me see. Can I? No, it's not in my previously saved one. So give me a moment here just to put up the symbol. Let's go take a look at market profiles, see if we're trading up above or below. Let's look at it on the 120-minute time frame. And we're trading above the market profile high. That's a resistance zone inside the 100. Come on, stretch, would you? I had to scrunch. Now I've got to stretch. There we go. Now we got my stretch out here. And if we take a look at it, the market profile high, a level of resistance out here, should have been 39.60-270. You can see we've moved above it. We've come back. We've tested it during this 2-hour session. So long as it stays above that, that is a more bullish than bearish sign. And that says, okay, wants to go test the, come on, don't do this to me. Always during live shows out here, let me just try to reload my style out here. There we go. There we go. This might make it a little bit easier. Try to get my cursor back. Okay. Yeah, so it's going to toy with me. In any event, using the market profiles, what we know right now is it's really still in the full-out bullish mode, and anything above 39.45.90 suggests not being short, at least the NQ. Let's take a look at the ES Mini. We're going to go take a look at all three of those. We'll take a look at the ES as well, and we'll take a look at the Dow. And I'm not going to leave out the Russell 2000, but we'll look at a different chart for that. But inside the ES Mini, it's traveled down and it's tested the support area. 1963.75 is its number. So support has held inside the 120-minute time frame. It doesn't break out on the 120-minute time frame until it clears 1979. So you'd expect some resistance along the way on a move northward at 1972. That's where you've got some congestion. If it can get above that, 1979 becomes the number. And finally here, before we go to a break, we'll see how quickly I can do this. Let's take a look at the Dow 120-minute time frame. Let's see what it shows, where it's traveling. It's traveling below its market profile. So it is the Dow that is a weak link out here, and until it breaks those lows that we took a look at, it's really traveling more in a sideways consolidation range. 877-927-6648. Steve Rhodes, TFNN. Thanks so much for joining us, folks. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is now off about 6 points. She's traded 16,906. S&P's up a couple. NASDAQ is up 19. Russell's up 5 points. So we took a look at the Dow. We took a look at the NQ. We took a look at the S&P. Let's go take a look at the Russell. Let's look at a couple of different charts out here. So the first one, we'll put up part of the Rhodes momentum, indicator signals. You can see now the Russell 2000, as was making a high back here. This is at 10 o'clock, and this is on the trading session of, July 24th. It was making a higher high, formed a shooting star, did that on less relative strength out there. So you had your reversal all together. 2 trading sessions later at the 2 p.m. session, you also had a bearish engulfing. The little red dotted line going across my screen happens to be the 200 period exponential moving average, so we can see that acted as resistance. And so this pattern here worked its magic again, moved lower. You actually got a nice bearish crossover back here at about 6 p.m., and that was on the trading session of July 24th out there. Then, as price was moving lower, it was trying to create that same bottoming pattern, a price relative strength divergent pattern. But what got in the way was a trading session of 12 noon on July 27th. So that pattern never came to fruition. Nonetheless, the bulls did step in here at about 2 p.m. Now, if I pull this back, I'm just going to ask you to believe me, it was a .618 retracement off of this hammer candle low to the high out here. Was it? Don't trust me. Maybe it was a 0.786 retracement. The easier way to do that because of the tool. Let's come here. Let's just see what it exactly was. We're going to switch back and forth between tools out here. We're allowed to do that, especially when you have no other real good option. So I take that back. You see, it was a 0.786 retracement, one of those normal retracements. 6.618 is a normal retracement level, and if it fails there, price fails there, it's going to go test the 0.786 retracement. So we know it's made a 0.786 retracement. That's referring to the 120-minute time frame chart for the Russell 2000. Now, what's interesting here is that same little bearish EMA across that we had back here to confirm the move down. We've now had a bullish EMA cross up here at the highs. We've seen a hammer candle, so we've seen a little bull sash candle. That took place at 2 p.m. We've seen the bulls came out and they supported price as price was moving down at 6 a.m. This is on July 29th. This was yesterday, formed a hammer candle. So the bulls inside what is the weakest of the four out here are out in full force trying to hold these positions. So what does that mean? What other tools do we have? Number one, we could see an A to B equals, we could see an A to B equals CD that would be forming out here. If we go take a look at what that pattern would be, we take a look at the low of that bull sash candle. That would be our A point. Our B point would be up here at the trading session about 12 noon. Our C point is going to be down at about $1,600. 1-to-1 A to B equals CD inside the Russell would take us up into about the 1155 range. 1155, it's got to get above the 200-day exponential moving average. Is there anything? I ask, is there anything that might help assist us in maybe saying that, okay, I can see that move happening? Well, I'd say let's come over here. Let's take a look at let's take a look at our wave counter out here. So this is the same chart out here. I've just cleaned things up with cleaned things up a little bit. And if we take a look at where we're at in the Chapman wave out here, you'll see you're only at leg C on the way up out here. In fact, let me just get rid of that one. I'll put this one up. Well, green letters might be a little bit easier to see. So that says, okay, you've got at least a fourth wave. You've got the MACD crossover. You've got the relatives. You got the stochastics moving, higher. Okay, and you've got you're neither overbought nor oversold. So the Russell 2000, and this is a 10-minute delayed chart out there. My apology for that. The Russell 2000 is suggesting to us that it wants a bit higher price. Remember, that is the weak link that is out here inside of the market. So it's really been the Dow and the Russell against the S&P and the NASDAQ. So I would have to say that before the market could potentially begin to croak, the Russell 2000 wants to go ahead and at least complete its pattern out there. And now if we go back and we take a look at the Russell 2000, we go back to those 4 time frames, we take a look at some resistance and support areas, and we'll do this inside the Russell on a 120-minute time frame, and then we'll go take a look at the daily basis as well. We'll see that what the Russell needs to do is to break 1144.61. To close above that on a 120-minute time frame would say that the change in trend has also begun inside its market profiles. And I say that because you can see on the way down here, the resistance line, the red lines have acted as resistance. And now what we can see is the support lines, the green horizontal lines are acting as a support level. So the key level for the Russell to get over is going to be that 1144, and it does suggest to me that it wants to move higher and at least test 1151, maybe even that 1155 area. 877-927-6648. We got the Dow off 13, S&P is up 2. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the Dow is off 17 points right now. S&P is up 1. NASDAQ Composite up 19. Russell 2000 is up 5 points. And moving to the upside of the market, Regenerant Pharmaceuticals, REGN, up 25 points right now, trading out at 329. It's got some nice volume behind its move out here. The volume so far today, 1 million, it's a little over 1 million shares. Let me move this so I can see. It's up with 1 million shares. It's moving into a swing point high from the trading session of March the 6th, only 1.3 million shares. So it's taken out a B point with volume. That B point was July 14th, only had volume of 700,000 shares out there. And this would say that Regenerant Pharmaceuticals, the way that it's moving up here, wants to trade more likely into the 360 level, 360 to 377, do more than a 1-to-1 A to B equals CD to the upside out here. So let's take a look here at the at the weekly chart. So the weekly chart, let me get rid of the A to B equals CD down pattern out here. The weekly chart shows the swing point for March 3rd, 2014, little doji candle out there. And that's got volume of 8.4 million shares. You can also see it got resistance on a weekly basis here of its TAS signal box, its market profile up at 343.77. But you're moving in 1.8 million shares from a weekly basis, moving in 8.4. So it doesn't look like this is the week out here. In fact, from a bullish standpoint, you'd prefer to not see it test that high of 352.49. If it does test that area and it fails, what you're more likely looking at is a very large consolidation, a sideways consolidation. It cemented the consolidation lows pretty well at about the level of about, the current weekly market profile low is the 274 range. I'd have to say a little bit lower than that, maybe the 265 level. So 265, 274 being the bottom of the consolidation. That's assuming at this stage here that it's unable to close above 352.49. So Regeneron Pharmaceuticals looking pretty good out here. Volume-wise, if this thing ever does really fall out of bed, the issue that it has is this high-volume weekly session from April 29th. Now, the cool thing is that's not a low. It's just a high-volume bar out here, and that's really its level of support, 270, the low of about 212.50 out there. So that's what's going on inside Regeneron Pharmaceuticals on a weekly and a daily basis out here. Buffalo Wild Wings just really struggling this morning, down $20 out here, even though they beat the top line and the bottom line. So I don't know what it was that was in the conference call. If they have had the conference call out here, it doesn't really matter. The conference call has been the traders, not a weekly basis. I have the weekly market profiles up. It's trading right at that support level as we speak right now in the 147.09-ish range. It, too, however, has a high volume bar, but this one happens to be a swing point low. And the top of that is 143 on a weekly chart. That's the February 3rd level, so that means February 5th, right? Is February 4th, February 5th is the high volume low that is out there. Now, it's not traded into that session here yet. 143.84 is the number. If you close inside there this week, that's what would then suggest, even though you're coming down with lighter volume, but we got a lot of time left in the trading week with today and tomorrow. If you're moving in there with volume, you've closed inside there with more than 7 million shares, it says that the low of that candle session ought to be tested. If we take a look at the daily chart out here, what we're going to see is volume yesterday to the upside, so it made a high. Did it make a high? Yeah, it made a high. It's not an all-time. Well, I don't know. It might be an all-time high. Let me go back to that weekly chart out here. So on the daily chart, it made a high, maybe an all-time high. Yeah, it did. How about that? So what you actually have inside of Buffalo Wild Wings is that the party may be over because it made a high yesterday with pretty good volume. The volume yesterday, which was its all-time high, 1.6 million shares. But now what we have today is volume off of the high. You've got 1.4 million shares in here as well. So let's see. I got the restaurant chain said it's expecting earnings to grow 25 to 30% in 2014. So that's pretty good. Analysts suggested, it says analysts polled by Thomson Reuters are expecting growth of 34%. Give me a break. What are those guys at Reuters Thompson? Who are they polling out there? When you take growth of 25% in 25 to 30%, yeah, I'd say that's still pretty good. Nonetheless, we have to see what traders are doing with the equity. And at this stage here, it's broken through a swing point on the daily chart. Hasn't broken a swing point low for a little while. Nonetheless, it's broken through that and really says that where it's trading into right now, well, where it really wants to go is down to the April 29th level. Forget about, look, February 4th has got a high volume bar as well. There happens to be another swing point low with some fairly decent volume back on April the 28th, April 29th level. So it looks like that's where Buffalo Wild Wings is headed to. Now, hey, if it can get down and test that low out here, the low being the 123.05 and do it with light volume, less than 3 million shares, that would be pretty good. You might want to, you're probably looking at a consolidation. You don't like to see volume off of the highs out here because at this stage, you see volume off the highs, it's usually not the last move. And this thing has battled its way back, that's for sure. But you don't like to see this. The other highs, the other selling that we've seen has not been off of the top, has not been from the highs out there. So that's Buffalo Wild Wings. Maybe it's best to stay away from the stock. If you like wild wings, if you like buffalo wings, then don't stay away from the restaurant. In fact, it doesn't look like you're going to stay away from the restaurant anyways, with 25 to 30% growth out there. Edwards Life Sciences, they were also out with numbers out here, up with about 10.5%, up $9 as we speak right now. Edwards Life Sciences taking out a B point with volume of 1.8 million shares. Last time it was up at any highs, it had only 561,000 shares. So this has got a fairly large A to B equals CD to the upside. Let's look at the small one. This is, let me make sure I'm on a daily chart out here. If we take a look at the daily, the small A to B equals CD will come off of the last lows right around the trading session of June 13th, June 14th. The B point's going to be that little, looks like that little doji candle on July 11th, doji high wave candle, and then the low on July 21st out there. So it's already attained the 1-to-1 level. You gap up into that, says it wants higher price. Likely price projection. Let's take a look at an expansion. Let's look at a what would be a butterfly pattern out here. If we take a look at that, we'd come off of the, what I would do is come off of the high here from May 20th down to the low of June 13th. So you're already above the 1 to 1.618 expansion of those sets of swing points. So I'm going to say let's not go with that as a tool right here to use as a price projection at this stage. Not that it can't go higher, but it's already made the 1.618. So I would have to say you're likely looking at Edwards Life Sciences wanting to try to make a run right now to $97.10, maybe $100.65 out there. EW is the ticker symbol. Everything looks pretty bullish inside of this equity. Also running to the upside out here, let's see, percentage-wise, let's take a look at Astronics Corp. ATRO is the ticker symbol. You know, this market, even though it's trading lower, boy, it is in total divergence as I look at another chart, total divergence as to what's going on inside the euro, Japanese yen out here. In any event, we'll get back to that in a moment. But, this is interesting. ATRO is a ticker symbol. They were out with numbers here. Says that their consolidated sales were up 146%. Man, you got to like that. 174 million from 70.8. I don't see the net income, although earnings per share more than doubled, more than tripled, right? It was 28 cents last year, 70 cents as we speak, but the equity has sold off out here. Again, ATRO is the ticker symbol. Let's look at the daily chart. So it's been in a downtrend. It's still staying in this downtrend here. If we just take a look at a trend line, if we come off of the highs out here from the trading session of March the 6th, down to the next area that we would look at here is the high off of the trading session of June 9th, you can see that trend here has been broken. I mean, it has not been broken. It attempted a breakout there, and you've got good volume behind the move out here. So it looks like there's still some troubles in ATRO land out here. If it can break above that, it's got volume. That would be positive. It has tested a swing point. It's done it with volume. What it really suggests is that price should at least try to get back up into that level, but it will not have broken its trend until you see it close above, I don't know, around the 52, probably the 57 area, 57.39 or so, somewhere right around there. It has some pretty decent volume inside of this. Let's put this on a weekly time frame. Take a look at it. Again, ATRO. I don't know anything about Astronics Corp out here. You can see the weekly trend, so also from a weekly basis, trading really right into it. A breakout on this equity would take it, you'd have to see it close about 59.56 if you were taking a look at the weekly market profile out here. And that would suggest that not only has the trend broken, but this is ready to move back into bullish territory. So that was on ticker symbol ATRO. So as I mentioned, you've got the Dow's off 45, S&P is down 1. And if we take a look at what the euro Japanese yen is doing, albeit a 30-minute chart out here, you can see this thing continue to move higher into that extreme overbought condition. So let's go look look at A to B equals CD patterns out here on the 30-minute time frame and see where price is likely projected to hit right here. So right now, it's about to move into the 1-to-1 area, which is at 137.51. The intra-session high during this 30-minute time frame, it's got another 15 minutes in order to complete that. The intra-session high, 137.51, it's already hit 137.50. So you could say that, okay, maybe this is about the time where it ought to begin to start moving sideways or pull back out there. But you can see we've had the market moving in opposite directions of the Euro-Japanese yen. We talked about, as we began the hour, taking a look at the ES Mini. We can see now it's moving up what might be the descending price channel line out here. Again, the larger line, the top of it is really the one that is cemented in place. The bottom one looks to be maybe okay or so-so. I would say a break of this area, though, and you're looking for the ES Mini here to probably run into a little bit of support at around 1955 to 1949. That's where it could form a Gartley buy pattern. That's what's going on inside the ES Mini. Let's take a look at gold. Let's go see what gold is doing. Let's go see what it's doing with regard to its market profiles out here. So we'll switch tabs. And as we take a look at gold, there's a little bit of a delay here. So this shows gold being down about $5. Gold is actually off right now. Hey, $5. Okay, so time-wise, we're okay out here. And as we take a look at the market profiles on a daily basis, not necessarily good for Goldilocks. The market profile low of 1302, which did hold as support level yesterday, and the day is not over. A close below that 1302 level out here suggests at a minimum that gold ought to move down and test the swing point low from June 2nd. And that's really going to be the key area to watch. That June 2nd low is 1241. If, in fact, gold gets down there or breaks through that low, then you're looking at A to B equals CD to the downside. And that A point is back on the trading session of, I'll go back and give that to you, that A point for a potential A to B equals CD to the downside is March 17th. That price level is 1394. Now, that is a weekly chart that we are looking at, so it's a weekly unfair low that I've got on my screen. Nonetheless, if you break through that level, says the 1194 is the price point. But let's put the daily chart up on my screen here. Let's go see what the TAS market profile unfair lows are. And yeah, so you close below the daily level here yesterday. There was a new formation, a new market profile that formed. All you did today was you traded up into that level, which is at 1303. The actual intra-session high today was at 1304. So on a daily basis, what it really needs is, again, another close below the B point of its A to B equals CD to the downside. In this case here, it's a July 15th level at 1293. We did see one close below it on July 24th, but immediately got back above that level. So watch the on a daily chart. Watch today's close. A close below 1293.40 would suggest a move down to about first the 1272, maybe 1257 level inside of gold. If we go take a look at light sweet crude, let's do the same thing. Right now I've got light sweet crude trading up about 25 cents at 101.22. Again, remember, this will be a 10-minute delay. But if we look at the daily chart out here, again, it's continuing to look bearish, even though it's trading up just slightly today. It looks more likely that light sweet crude wants to trade down into the swing point here from July 15th. And if it can break that level, if it does break that level, which is $98.02, then what you've got is you've got an A to B equals CD to the downside, takes you to about the 95 area. And if we pull this back, that'll take you all the way back to its swing points back in the March 18th area, 2014. So that's what's going on in the case of light sweet crude. We've seen the ES Mini again on the 2-hour chart. And this 2-hour time frame doesn't end until 12 noon, but we have seen it bounce off of that lower descending price channel line out there, but a lot of time left in the trading session. Again, our call number is 877-927-6648. We've got the Dow trading off about 55 points. Boy, there's weakness in the Dow. S&P's down 2, NASDAQ composite up 10 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's off 50, S&P is down 2, NASDAQ Composite up 13, Russell 2000 up 3 points right now. Interesting. NASDAQ 100 up 10. You've got gold back 4, silver's off 2 pennies, light sweet crude is basically flat. It's up about 9 cents right now, trading out at 101.65. Let's take a look and see what's going on inside some of the sectors inside the S&P 500 right now. You've got the financial sector virtually unchanged. It's up 3 pennies, trading out at 22.80. 81. You've got the consumer discretionary sector up about 1/4 point. It's up trading out at 66.92. The healthcare sector up 3 pennies. To the downside, though, got the XLK number one weighting structure inside of the S&P is flat. So the number one weighting structure is flat. You've got the energy sector, the XLE off 1/4%, down 25 cents. Utilities off the largest here, off about 0.8%, down 36 pennies right now. Let's go check in on the XLE. Let's go see what it is doing out here. Give me a moment. We'll take a look at the XLE. Should have it right there. So as we take a look at the XLE, as I said, it's trading down about 26 cents right now. So the XLE, if we take a look at its market profiles out here, it's been really trading in a consolidation. Now, the XLE had some real damage done to it. The trading session of June 24th. This is a daily chart that we're looking at. So you had volume off of the highs. Volume there was 17 million shares. When it last made its way up here, which was on the trading session of July 24th, 5.7 million shares. And it's been trading in a sideways consolidation-ish type range out here. Everything has pretty much been consolidating up at these highs, not being able to really break to the lows out here. If you take a look at the bottom of the consolidation, you'd have to say it's either the market profile low right around 98.38. I would suggest that the swing point from July 11th at the 98.14 level, and there's only 10 million shares down there. So it's trading into that area as we speak today. So it's got 10.8 million shares. And today, volume to the downside in the first hour of trading about 2.5 million shares. So if it were going to break, today would be a day where it would be able to do that, assuming that volume maintains its level. If it can't break through, test the lows of 98.14 from July 11th, closes back above that, the consolidation would stay in place out there. So that's what's going on inside of the XLE. Let's take a look at the utility sector. Let's get a feel for where that might be headed to and take a look at some patterns. So that's trading off a total of 34 cents, about 0.8% as we speak. This too has been just really moving sideways. Now, today it is trading below its market profile low and into a swing point. So the market profile low is 42.41. The swing point that is trading into is on June the 12th. 16 million shares are down there. You're trading into that so far today with 2.6 million shares. So inside of the utility sector, it could be forming an A to B equals CD to the downside. Now, you'd use as the swing point, you'd use the trading session in July 18th, 5 million shares, so you're trading into it with volume most certainly. Now, if we pull that back, normally you would see this sector here moving higher. If the market is going to sell off, just as a potential line of defense out here. But if it were to break through, close below that swing point, we've got to take a look at that. That's that low from at 42.19. That's where you could be looking at an A to B equals CD to the downside. Your A point would be the high from June 30th. Your B point would be the low we were looking at. And your C point is from yesterday as it made a retracement, about a 40% retracement. And that would give you a price projection of around $41.14 and maybe $40.55. At $40.55, that would take you down into the lows back in March out there. Well, folks, our time is up. Stay tuned. Our man Basil Chapman is up next after Basil, because it is a wonderful Wednesday. We got our man Larry Pesavento, then Daryl Martin, David White. Don't forget the Tom O'Brien Show from 3 to 5 and Andy Heck from 5 to 6. Have a great Wednesday, folks. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.